Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
All of the indices tracking the overnight losses on Wall Street are trading lower.
Nifty Bank support 20-day, which is 57,918.
NDA has gains in about 16 seats. India Alliance 14.
25,778, about a 0.4% lower. 10% pop on Pine Labs. 243 is where this one is now at.
We see a lot of demand for gold loan in these days.
For now, it's been quite volatile. Yes, right now we are seeing that massive recovery from the lows. The Nifty is absolutely flat, but there's some negative bias to that.
For the food prices, as such, this year the momentum remains very slow for a lot of food items.
They're well past the halfway mark of 122. 197 seats is where the NDA is leading.
The Nifty, very volatile. We're 60 points off from the highs, but 60 points off from the lows as well, at the 25,811 mark.
Okay, well, that's the day so far. Markets are tempered in their enthusiasm. It's not as if things have gone wrong. Actually, they've gone, from a market standpoint, spectacularly right. I mean, there are electoral wins and then there are electoral wins. This is, pretty much a definition of a sweep. 243 seats, NDA poised to gain over 200 of those 243 seats. So this is absolutely, actually far better than any exit poll and anything which was put out there before the election result really came through. Markets are doing their own thing. Global cues are a little weak. 500-point rally, 600-point rally coming into today. So I think all of that is weighing as well. This is Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, afternoon. Up ki bar, 200 par looks like, going by the numbers that we've got so far. But market's still sulking, right? We started off the week on a grand note. But over the last 2 days, you've seen the volatility kick in and markets now sub 25,800.
So I think it's just about giving up some of the gains that you referred to earlier, because from 24,300 thereabouts, we've rallied all the way up to 26,000, from 25,300 to 26,000. And then let's not forget the global context today, because we had that, AI shake-up in the US. You've got a lot of the Asian markets that have closed with deep cuts, 1.5% to 2% lower. So in that context, we're getting into the weekend, maybe some profit taking. That's pretty much about it. Nigel?
Well, that's right. Profit taking, and I think today belongs to the BJP as well as Nitish Kumar. What a super duper win out there. You're wondering whether or not the polls were correct. Well, in fact, the victory margin is even higher than that. So good on them. But the markets for the time being ignoring that. I guess that phone call from Mr. Trump is going to be the key trigger from here on. So let's hope that that's coming sooner rather than later.
Absolutely. And I think, markets are all about what next, right, Nigel? And I think, as you said, the next one, of course, is going to be when that trade thing gets resolved with the US. Bihar is done. But still, you've got to just an absolute devastating blow to the opposition, and if I can use that same devastating sweep in a positive way for the NDA. So, that's what we have. We've got just the, up and down on the Nifty in terms of what's pushing things up and down. So actually both the financials, Axis adding the most, ICICI taking out the most, SBI, Reliance. Reliance has been having a fairly decent run lately, and Infosys, Tata Steel, etc. on the other side. Well, I think let's just quickly run you through what you should be watching out for as we go into the last hour. So 100-point cut, nothing very large, but we are around 25,773 at this point. Metals, IT sector are leading the losses. Banks also trade with some cuts. Digital payment transaction services provider Pine Labs seen a very strong listing. It was up about almost 18%, has given up some of those gains, but it's still strong. Grow is still going strong. So IPOs this week, pretty good. Strong results from Bharat Dynamics. Well, and of course, the defense index is the top moving index, 1% nearly on the Nifty defense index today. And Muthoot Finance is perhaps the stock of the day. Large, very, very large gold financier, number one, top one, and another 9%. It's a big breakout move. The companies raised their guidance. We have the management and we'll play out some sound bites as we go along. How should you position yourself is the question. Mitesh is with us with that crucial answer. Mitesh, good afternoon. Your thoughts?
Yeah. So I think, the morning was pretty good when we kind of opened down and managed to roll down to that 25,750 zone as the support area, bounce back from there, but you come back again. So as long as you're above this 25,750, 730 zone, there's still chance of a recovery. But in case we start closing below that, I'll be slightly worried and then, maybe look at retest of 25,500 or in the bad case scenario, even 25,350, which was the low which we got on 7th of November. 25,320 actually, but yeah, the pivot is around 25,350. So having said that, I think, I'm keeping a close watch. The indicators are with that all choppiness, the decline from 26,100 to about 25,320 and then bounce back and then coming back into the range. They've all started to shrink. So maybe, we might not see much of a damage, but in the worst case scenario, 25,350 on the downside could be tested in case we keep declining. And on the upside also, now getting past 26,100 is a challenge. So these are the two levels I'm watching for. If you ask me a view on the index, in the short term, I'm extremely neutral, but eventually I do expect that the markets will get past this volatility and move on the higher side. On the stock side, I have one buy and one sell. On the buying side is Sun Pharma, which I would recommend buying with a stop at 1735.36 and a target of 1780 on the upside. While on the selling side is HDFC AMC, which I would recommend selling with a stop about 54.25.30 and a target of around 5,300.
Thank you, Mitesh. We'll come back to you. For the week, though, the Nifty is still up 1.2%. Mid-cap index is up a similar amount, 1.25%. The big winners this week include Asian Paints up 11%. Adani Group stocks higher. Adani Enterprises leading with a 7% up move. IT stocks right on top with HCL Tech TCS also clocking in 4-5% kind of gains. Gautam Chowcharya, head of global markets India at UBS, is now joining us here in the studio. Gautam, great to see you. So if you had to tell us 3-4 big takeaways from the conference this time, what would those be?
Hello, everyone. So I think the first thing I would say is we saw after a long time, initial signs of optimism, both select, I would say still select corporates, quite a few financials actually, and also among some global investors. I think the way to put it is, it's not a case that global investors are waiting to jump in or as such, but at least more engaged in terms of looking at bottom-up ideas constructively. So which we have been seeing a little bit for the last 2-3 months, but in the conference it is very, very clear that they are willing to engage.
Got it. So that's one. Yeah. Anything else that really stood out for you, which marks a change from what was the situation, say, 6 months back? So
sectorally, financials. I think that's where the optimism, again, it's not a full-fledged bullish commentary or anything, but clear optimism on both sides, from the corporates as well as from investors. That's one big takeaway, I would say.
And they're bullish that the jump that we've seen in loan growth, courtesy GST 2.0, the festive season, etc., that will sustain. Yeah. I mean, is there enough from what you heard for you to raise your EPS estimates for any of the banks? So our analyst hasn't raised estimates yet, but the corporates are also, again, they have seen a few quarters, so it's not that they are jumping in with excitement. Okay, we'll have a great uptake. So the classical line is still second half should be better than first half. But beyond the initial headlines, if you probe here and there, then they are seeing early signs. Like some banks are seeing pickup in loan growth, which have historically been more conservative or lower growth. Some of the NBFCs are seeing clear bottoming out of credit cost trends. The NIM trends clearly are bottoming out. So a lot of these, if you add that together, and because as market participants and talking to investors, we have to look at these early signs rather than clear signs, then yes, there is incrementally you're more bullish on financials post the conference than you were before.
Absolutely. And I think there is room for them to surprise and do well.
So Gautam, great to have you here now, and thanks for keeping the promise, right? That's what we said on day one. You want to see what you have to say on day 4 or day 3. My question is simply this: when you interact with a lot of the foreign clients and the foreign participants who came in, I guess no one dislikes India. No one's going to say we don't like India. The problem is they like other markets better for one reason or the other: valuations, the AI theme, etc. So how is that conversation shaping up?
So look, the AI part of it is tactical. A lot of investors were playing that investment cycle or trade this year, and obviously India didn't present enough opportunities on that. There are opportunities in rest of Asia, of course the US. But is it a case where investors are comfortable that India will be fine from an AI, anti-AI, etc.? Still a bit early. Okay, so I don't think the investors were necessarily looking or still are looking at India either from a pro or anti-AI trade lens itself.
So why I'm asking this is, by the way, folks, today the Kospi has ended with a 4% drop, right? So a lot of these markets have run up so much. And then you realize they're very prone to shakeouts like this. Someone sneezes in the US, Nvidia, something goes off, and people are very quick to rush to the exit. So can that over-positioning or hyper-over-positioning, can that start reversing? And then therefore you realize, oh, I should be in India as well because these markets are prone to very, very sharp volatility now.
I've heard that from few investors, that is India an anti-AI trade and therefore...
Yeah, therefore, de-risk with India.
Yeah. But again, at least my view and experience in the market suggests that that's not how it plays out. If investors lose money in the US or lose money in Kospi, they're losing money. It's not that they are able to rotate away in time and...
So when those markets do well, we anyway don't do well. When they fall, then also it's a problem.
At the margin, India can outperform or doesn't fall as much. Like today is a good day, a good example. But does it mean meaningful flows coming which will drive India up? That's what I mean doesn't happen like that.
Any new sub-themes, new ideas that emerged for you in the conference particularly?
So look, themes, I won't call it new necessarily, but themes which we have been bullish on and got reinforced, and I would say reinforced where our analyst estimates are ahead of the street or they're more bullish, is the broader power renewables part of CapEx, equipment, the entire supply chain or entire ecosystem, where our analyst estimates are significantly ahead of street. That was very clearly reinforced, not just at the conference meeting the companies which attended, but including some of the expert panels or the tours we had around the conference. So that ecosystem, I think, will surprise investors and markets, or not just in the next 2 quarters, but for the next 3 to 5 years. The level of activity in that broader ecosystem is very, very strong. So that was one key surprise, I would say, beyond financials. Otherwise, consumption broadly mixed bag, but not big surprises. Pockets doing very, very well, jewelry, etc., for example, including the outlook. But again, I won't say it's a big negative, a big new surprise as such. Yeah.
All right. Hi, Gautam. Good to see you in the studio. Gautam, I wanted to ask you about the state elections. There was some focus on it, but actually, we are nearly at the level that we were pre the exit poll that came out. So no talk at all about the state election, non-event, or at least it's a sentiment positive. What's your take?
It is sentiment positive for sure, but I think everyone was expecting this outcome, I guess. I don't think there was much anxiety talking to investors that the current government will have a negative outcome and therefore it can impact policy making, etc. So that was not a base expectation anyway. And obviously today, the global regional markets is not helping.
Okay, all right. So the big trigger then is going to be the India-US trade deal, right? I mean, all eyes on that. That's what will bring back the animal spirits.
Absolutely. That remains something which investors are watching very, very closely. So in many of the macro meetings, including with policymakers, that kept coming back, how, when, what. Obviously, no one will give an answer about when exactly. But I think there is a broader hope building up that it's going to be imminent.
Gautam, just to go back to the point you said, one of the key themes that emerged from all of this is renewables and power.
Yeah.
There's also an argument there that whether we could be in a situation of overcapacity, in the medium term, not in the near term maybe, and the fact that the stocks have already had a good run. So can you just explain to us, expand on that thesis? And I don't know if you had any corporate tracks to that effect. What really came out and what makes you so convinced on renewables?
So look, capacity, if you just look at a linear curve of whatever the corporates have announced, etc., and you build in some demand side and you say overcapacity. But first, why our analyst is bullish and which is reinforced, capacity doesn't come up in a linear curve. There's always misses, delays, etc. Second is the entire value addition for the equipment suppliers. There's value addition happening by backward integration. And that will be much more difficult or much more challenging than simple expansion. And there again, our analysts' work suggests that the street expectations of overcapacity, that's not imminent in the next 2-3 years, but will take possibly longer.
Okay.
And look, demand, how quickly the demand picks up for renewables will also depend on how the transmission capacity, etc., comes up. So 5 years out, who knows? But it's
at least
not,
in the near term, it seems to have a runway.
Exactly.
Adam, was there I just always wonder, there are so many meetings, hundreds of meetings, right, between investors and kind of right there in the middle of all of it. Is there an aha moment in a conference? You point out, will say, it'd be nice to get a note saying, well, you know, things we learned at the conference we didn't know before.
We keep looking for that, but in today's environment of all of you around, it's difficult to get those moments.
But it happens, right, sometimes?
Rarely. These days it's much more rare than a few years back.
Because there's so much information which is already out there.
Exactly.
But this kind of reinforces some of the...
You connect the dots, pick up early signs, like the financials I said in the beginning, that those are clearly early signs.
But think about it, it's a nice product.
It is.
The aha moment of the conference.
But to me, the aha moment is a simple one-line thing. I think the clearly early signs of optimism.
Early signs of
credible optimism, not just classical second half hope, but clear optimism.
All right, well, we'll leave it there, Gautam. Thanks very much. Lovely speaking and a great conference.
Thank you for coming down.
Thank you.
Okay, well, you know, what we're going to do is go across to my colleague Gaurav now. Pine Labs is the one that we're going to talk about. It's made his D Street debut. And Gaurav is here with what the business is about. And of course, more importantly, now that it's listed against not a direct comparable like a Paytm, but where are valuations at? Gaurav, take it away.
Well, yes, when we look at Pine Labs, we've already seen some kind of valuation. We already saw that the price to sales, when we look at the valuation, and when we look at the listing, it was already at some premium. But even if we look at the peers, like Paytm, although it is not an immediate peer, we saw it was actually in line with them. Now, when we look at the IPO, overall the price band was set at around 210 to 221. It got listed at a higher price and now it is trading around with 17% gains. If you look at the company, they were actually raising money to debt repayment, investment in tech, and at the same time to expand internationally. Now, when you look at the business, although the profit figure, it has just turned profitable. For this quarter, the profit was just at around 4.78 crores. And from here on, company says that when you look at the company's losses, they said that this was because of they were scaling the ecosystem, they were pursuing acquisitions, and at the same time, there were some international expansions that they were taking up. Apart from that, when you look at the revenue stream, company is actually earning revenues from merchants, and at the same time, they also earn from banks. So that is something that the business model they have. So it seems that they have a sound business model. In fact, when we look at valuation, it is in line with the peer right now if you compare it with the Paytm. But other than that, the growth strategy going ahead is a key thing to watch out for, because company is now planning to go global. Now, given that there is some scope for the digital payment system globally, we may see some gains coming up for this company. As of now, we are seeing the investors showing some optimism. The stock is up almost more than 17% after listing.
Thank you very much for that. Just about 15% of the company's revenue right now comes in from the international market, but that's a segment that they're targeting. And they also have about 1,000 crore of cash on the company's books. But the other one that we're focusing on is Bharat Dynamics. In Focus post a good set of, very strong set of numbers actually. Upasna joins in with more. Upasna.
Well, it has certainly been a good quarter for the company. It was a beat across the board, except on the margin front, we saw a slight decline. Now, revenue saw an uptick of nearly about 1.1 times versus the street estimates of 27% growth. EBITDA margin saw a downtick of nearly about 180 basis points. This was due to higher material and finance cost, which led to this. Now, net profit saw an uptick of 76%, which was aided by higher other income. Now, when we talk about the order inflow for Q2 for the company stood at 810 crores, with which took the order book above 22,000 crores, which is nearly about 5.5 times the TTM sales. Now, company has also announced order win. It has signed a contract worth 2,100 crore with Ministry of Defence for supply of anti-tank missiles for the Indian Army. And this order is supposed to be executed in a span of 3 years is what the company has indicated. Now, Phillip Capital estimates that with this, the company's order book will go above 24,000 crore, which is nearly about 6 times the TTM sales. So all in all, good set of numbers from Bharat Dynamics, and we can certainly see the stock surge on the back of this.
Okay, well, thanks very much, Upasana, for that. We'll take a break. We are back. The other big conversation today, Sunil Kaul from Goldman Sachs on the other side, with why they've upgraded their view on the Indian market after a full 1 year. Okay, welcome back. Sunil Kaul is Global Emerging Market Equity Strategist at Goldman Sachs, and he's now joining us. Sunil, always a pleasure having you with us here on CNBC-TV18. Start by saying congratulations. You, I think, downgraded your view on the India market about, it was, I think, what, October last year? And the markets behaved itself in line, I should say, with what your view was. And now you're upgrading your view. You're saying things are turning, things are changing. And obviously, it's not because markets have run away and you're trying to play catch-up. It's not. But you are, in that sense, preempting a turn here. So just 1, 2, 3, 4. What are the top reasons, Sunil, for why you're changing your view now?
Listen, Prashant, always a pleasure to talk to you. I would say, look, I think the reason we downgraded is the same reason we are upgrading right now. I think the key reason we downgraded our view a year or so back was because we were expecting growth to slow down and we were expecting earnings downgrades to come through, which is exactly what happened over the course of the last 12 months. Obviously, all the tariff news flow did not help at the margin and people sort of de-risked from India. But I think the primary reason why India underperformed the emerging market so much over the past year, despite, as we have spoken previously, that emerging market has had a great year this year, is because of the earnings slowdown and earnings downgrade cycle. And so I think that the key view we are taking in here is that we think the downgrade cycle has bottomed out. If you look at the earnings integers for MSCI India or Nifty over the last 3 months, they have stabilized. The current reporting season has actually been a tad better than what the street and we were expecting. The season is almost wrapping up. But for MSCI India, we are looking at this quarter about 13% year-on-year earnings growth. The street was expecting 9% earnings growth. So to that extent, it's been a good quarter. We have seen select upgrades in the market in certain sectors. And so the call really here is that we do expect earnings cycle to turn into coming quarters. And a large part of that is also because of the cumulative impact of all the easing both the RBI and the central bank have done over the past year. And some of them, obviously, GST, personal income tax cuts, a host of reforms from RBI, which ease liquidity in the system and allow banks to extend credit. We think, obviously, these things play out with a lag, and we think the lagged impact of all of this easing should start to show up in the numbers. I think that really is the key view there. So upcycle in earnings on the back of growth supportive policy from the government. And at the margin, I think positioning is pretty clean. You've got 30 billion selling from the foreigners over the past year, which is the second largest selling in India's history. All the positioning metrics, all the conversations we have had over the past year shows that people have largely de-risked from India. So positioning is clean. Valuations are still a tad higher, but the premium has shrunk quite a bit at current levels in terms of premium for India versus the rest of the Asia or the emerging market pack. India tends to outperform over the next 6 to 12 months on a forward-looking basis. And we did a detailed valuation paper as well, along with the upgrade note, wherein we looked at a variety of different valuation metrics. And the general sense we have is that India can hold on to the current valuations, which are about 23 times, but we think around 21, 22 times should be the fair value for India. So we are not expecting a large de-rating risk on multiples, about 5% in our base case. And so the view really is valuations hold on to current levels more or less, and earnings come through, which is what should drive markets higher. So we are looking for about 14% earnings growth for next year, which is largely in line with what our return expectations are for Nifty at 29,000 target for the end of next year.
So Sunil, 10% EPS growth for this year and 14% for next year. Is that good enough for the FIs to come back into the Indian markets at scale?
We have, that's a great question. Look, I think we have a similar number for the broader emerging market pack, and maybe slightly better, but that's also because you have a couple of larger tech-heavy markets where, because of the AI strength, numbers are earnings continue to get upgraded. So those markets, Korea, Taiwan in particular, are printing close to 25-30% earnings growth this year, but also next year expected to be strong. So that's kind of upwardly distorting the numbers a little bit. But for the broader markets overall, we do think India stacks up pretty high after some of those markets. And so we have about 12-13% upside for Asian indices and EM indices overall for the next year. And so India at 14% local returns with 1 or 2%, actually 2 to 3% currency gains, and a bit of dividend yield. You're looking at 17-18% dollar upside and probably close to 20% total returns for the market, which should be pretty good for the market, and certainly better for what it has done this year.
All right, hi Sunil, good to see you. And Nigel on this side. What's your view on the mother market, on the US market? Last night there was some kind of tremors that we saw. Last few days has been a little bit jittery, but to be fair, those markets have seen a beautiful run. The economy has been pretty okay, and the earnings as well have been coming about in the US market. So what's the view, particularly on the AI theme? Do you think that it's getting a little bit into the bubble territory? And, do you expect the US markets to continue to outperform, or do you expect the emerging markets now to play catch-up?
Look, I think we had another detailed report out just a couple of days back, Nigel, which was looking at our longer-term 10-year expectations for the global markets. And as a house, we have taken a view that the emerging market pack should outperform the U.S. equity markets over the next 10 years. So we have about 6-7%, around 7 to 8% upside, annualized annual return for U.S. equity markets, and close to 11-12% upside for emerging markets. So we are taking call that the emerging markets should outperform over the next decade, the U.S. equity markets. Related to your question around AI, I would say, look, I think we still think that fundamentals are strong in the sector. I think the numbers that have come out from a lot of the AI-related companies, obviously we have the NVIDIA earnings next week, but so far the companies related to the sector that have printed numbers have been pretty strong, both in US but also the spillovers in Asia have been strong in terms of the tech or the AI-related companies there. As a consequence of that, we have actually raised our earnings numbers for some of those markets which are tech-heavy in the EM region. So I would say fundamentals continue to remain very strong. Obviously, there have been some investor concerns around the overinvestment in capex cycle in AI, but we think those concerns are overdone. There is a lot of positioning and length that has been built up in the sector, and I think what we have seen, I guess, overnight in US, but also last week, is some of these AI wobbles wherein people are taking profits heading into the year end. So that's more a question on valuations, but we do see that the underlying demand trends are still very strong, and we still are quite constructive on the tech and the AI sector overall.
Sunil, hi, valuations, and I was exactly coming to this because going through your note. So you've still kept the overweights on the other markets that have really stolen the thunder this year, right? China, Japan, and South Korea. South Korea is up some 70%. Today it was down 4%, but otherwise, what a phenomenal move. And in your note, you say, and I quote, that at 23 times, price to earnings, valuations in India are still high, but they are justified by a variety of valuation methodologies which have compressed relative to the Asian region. Explain that to us. How is India suddenly looking more moderate on the valuation front at 14% earnings growth?
Yeah, look, I think, as I said, if you look at the valuation metrics, and in the paper we looked at a variety of them, about 6. Some of them are absolute valuation metrics, some of them are relative valuation metrics. But basically, if you look at the how much valuations Indian market is justified based on the growth differential between India, GDP growth differential between India versus the rest of the pack, how much is justified based on the stronger ROEs India has relative to the rest of the world. Obviously, the two markets that are getting premium valuations across the board is US equities and India, and in both cases they are the markets that have the highest ROEs in the region, and some of that is therefore justified by the stronger profitability on the ROE side as well. We also looked at a variety of other approaches like the DDM approach, yield gap. It sort of takes into consideration where the rate environment is, but also where the medium-term growth expectations are baked into the market. So all put together, as I said, all of those metrics do point to some moderate valuation correction in India, but it's modest, and on a median basis, only 5% de-rating. So the message was, look, I think given the current state of the market, the current fundamentals, and the growth trajectory of India, you should still expect multiples to hold true. Obviously, there is the domestic bid and the support for equity market, which is to do with the market structure. That also helps at the margin. But also to your question about the valuation premium compressing, that has happened in both directions, right? At the peak a year back, India was trading at peak multiples, which was 25 times. So you have come from 25 times to close to 22 and a half right now as of last night. And so there is a bit of compression that has happened on India's side, but also for the broader region, we were trading at 11, 12 times forward, which has gone to like 15 times forward. So the rest of the region has outperformed and rallied, as you noted. Korea is a case in point. And so from both directions, you have seen the premium collapsing somewhere at 90% plus a year back to around 45% now, which is half of the levels at the peak. And as I said, when we look at the forward-looking returns over 3, 6, 12 months from the current level of premium, India tends to moderately outperform. And so we're not making a big deal around the valuations point, but I think, as I said at the upfront, the main key reason for the upgrade is that earnings cycle is turning.
Understood. And thank you for explaining it in such detail. Very quickly, Sunil, before we let you go to start your Friday, so you've upgraded India. What are you most bullish on in this market in terms of just key themes?
Look, I think we continue to like the consumer pack as well as financials. We have a variety of consumption sectors in the overweight pack. We still like autos, a little bit of preference towards the mass four-wheelers and the compact SUVs there, given the GST benefits there. We also like the staples pack. A lot of those stocks started to do well after the GST cuts announcement and have given back those gains. So I think the risk reward still looks pretty good. We have upgraded durables, and we also like the broader kind of tourism theme. So all of that is playing into the consumption. And we also think financials should do well in this environment, especially given all the easing measures that the RBI has undertaken, which cumulatively should release about 2 percentage points of capital in terms of total credit into the system. And so I think those two sectors should be the leaders. We continue to like some of the secular themes like defense in there. And the funding areas are largely coming in from the export back, pharma and IT, as well as industrials, excluding defense, where we still think at the margin there will be moderation in the infrastructure spending from the government. So largely financials and consumer pack is where we are most excited about.
Thank you, Sunil, for joining in. That's Goldman Sachs. Sunil called 29,000 target on the Nifty, and some optimism is rubbing off. The Nifty is now back above 25,800, inching towards 25,850. And it's IT, which is trimming some of the losses in the last few minutes. So if you pull up, we'll just get some of these IT stocks up, and you can see a bit of an up move. In the meanwhile, Nigel has now moved over to the F&O desk to bring us the latest trends.
Well, that's right. You were expecting the markets to be much higher today, but actually, though we're lower, we're still holding above that 20 DMA odd mark. So I'll view that as a bit of a positive. Until that 25,500 odd mark does hold out, well, we must say that, in fact, maybe the market's going to go ahead and test higher levels. Now, one technical level is moving towards that oversold mark, which is the Nifty PCR. That was at around 1.2. That's gradually come down to around 0.76 or thereabouts. So that's moving to the lower end of the range. And that's because call writing has come back into play. Whether you're looking at the 26,000 call, big amount of open risk build up out there. 25,900 call as well is seeing a good amount of open risk build up. And the premium is coming down on both those two strikes, which tells you that the bears believe that they can protect that 26,000, 26,100 odd mark. Individual stocks in focus towards the fag end of earnings, you'll be happy to see that there's a good amount of fresh buying on result reactions. So whether it's Bharat Dynamics, which is doing very, very well, you have Muthoot Finance as well, that's seeing a good amount of buying, open risk build up as well out there. While Vodafone Idea, this one's very interestingly poised, because now it's moving to around that 11 rupees odd, which was the FPO price. If it can get past that, it could be in for a bigger run. For the time being, the shorts are getting a little bit jittery. That, seeing a big short covering bounce that's playing out here, but it needs to hold above that level. 11 odd mark to start the next round of the up move. Finally, Biocon is seeing some unwinding after the big run that we have seen. However, Glenmark, the stock that I was talking about earlier today, it's crossed the 20 DMA, it's getting towards the 50 DMA, and that one in the last few days has been seeing a good amount of delivery-based buying as well as fresh long build-up. Stock is still down 15% from the recent peak, so I think we'll keep an eye out on that one. Net, we're down, but still we're holding above the 20 DMA. Back to you guys.
Thank you very much for that. Let's get back to some of the big movers, and that's Muthoot Finance. Strong Q2 numbers, and the management, Gaurav, upgrading their guidance for the full year. Tell us more.
Well, yes, when you look at the numbers of Muthoot Finance, actually a very great set of numbers. In fact, today is the last working day of our quarter two's earning, and it seems that Muthoot is actually closing this earning calendar very well. Because when you look at AUM growth, that is at around 46% on a year-on-year basis. And what the good news is that earlier they were guiding for 15% growth for AUM. Now they are guiding for 30 to 35% growth. So it was a much awaited upgrade in the guidance that they have done this quarter. Apart from that, if you look at the numbers, now net interest income that increased almost by 58% on a year-on-year basis. There was an impact of 300 crores additional impact, and this was because of the NPS which declined. But apart from that, profit that increased almost by 87% on a year-on-year basis. So a very strong performance there as well. In terms of the guidance and the outlook going ahead, management is very confident that they will be able to achieve that 30 to 35% mark. In fact, if you look at the net interest margins also, in this quarter we saw an uptick. From here on, they say that there will be the margins, the yields will remain somewhere in the range of 18 to 18.5%. But given all the parameters that they have proven to be strong with, we saw that brokerages also became very bullish about it. In fact, CLSA, they upgraded the target price to 4,000 rupees. We also have Jefferies, who gave a target price to 4,000 rupees. And after that, we also had a chance to meet with the management. They also gave a very strong outlook. So let's go and also listen in to what they had to say about the outlook going ahead.
Instead of the yields, we should be looking at the NIMs. So NIMs, we are thinking at 10.5%. So occasionally we get some bump in the yields because of some old reversals of NPAs and old churning of the NPAs, etc. Churning is actually what is happening here. the old NPAs with a lot of old age, lot of interest accrued on them becomes replaced with a new set of NPAs. So on that, we get a bump in the income. That is one of the reasons. So, but instead of the yield, we should look at the NIMs. So if the borrowing cost comes down, maybe 10-15%, 15 bips is what we expect in the next 2-3 quarters. So we will still maintain our yield, maintain our NIMs, and probably reduce the yield. Instead of the yields, we should be looking at the NIMs. So NIMs, we are thinking at 10.5%. So occasionally we get some bump in the yields because of some old reversals of NPAs and old churning of the NPAs, etc. Churning is actually what is happening here. The old NPAs with a lot of old age, lot of interest accrued on them becomes replaced with a new set of NPAs. So on that, we get a bump in the income. That is one of the reasons. So, but instead of the yield, we should look at the NIMs. So if the borrowing cost comes down, maybe 10-15%, 15 bips is what we expect in the next 2-3 quarters. So we will still maintain our yield, maintain our NIMs, and probably reduce the yield.
Hey, look at that stock go 10% higher. Muthoot Finance, really the stock of the day in terms of the earnings reactions that have come through. Well, on that note, we have to take a very quick break. Come back on the other side. We'll get you some final trading calls of the day as well.
Okay, well, welcome back. 50 points higher now, so which means sharp recovery at this point. So, beg your pardon. Okay, I think I might. It's not.
Oh, it is. It's unbelievable. It's almost as if there's something happening on the
50,
trade
right?
deal.
I said 500. Yeah. It's 500 off the lows. I said, okay, yeah, 600 off the lows, and 0.25%. Look at that. Look at that go. I mean, now the move is
Massive.
coming, right?
Yeah.
And we were wondering as we were starting the show, well, thoda tha to, market maybe should have done. And it is doing that now. So off from the lows, it's about a 200-point recovery for the Nifty at this point in time. Maybe if you can just quickly put up the what's pushing the index up and down, the index movers list out there, and it'll give you a quick sense of what's really happening. The weighted movers on both the upside and the downside. And yeah, there you go. So Reliance, I think, is shot up. So it's adding about 20 points. It was up in the beginning as well, but I think Reliance, SBI, Axis, Bharti Airtel are some of the big contributors which have started participating a little bit more. Reliance is a vertical liftoff, and I think that should be responsible for the bulk of the 50-odd point move that you're seeing right now, at least the incremental move that you're seeing right now. So, we were talking about Bihar, right? And it's a definition of an absolute sweep by the NDA in Bihar. Parishit is here with should I say, Parishit, the final tally or pretty much the final tally?
Well, it's pretty much the final tally. Yes, the Election Commission will call the election later in the day, but these results are very, very clear. The NDA is inching towards the 206 mark. 206 seats were won by them in the 2010 elections, and the JDU this morning, we were discussing as well, had predicted that they will cross 206. Whether that happens remains to be seen. But a poor performance by the India Alliance, especially by Congress and the other opposition parties. But within the NDA, you have one big hitter, and that is the LJP. We're not able to bring up the LJP numbers right now, but the LJP has been a big striker in the NDA camp. They had been given 29 seats to contest from, and they've managed to win 23 out of those seats. Remember, in the 2020 Assembly elections, the LJP had won only one seat. So this is a massive gain that the LJP has delivered for the NDA. Record numbers, JDU and the BJP both doing very well. Now let's just look at some of the other factors that have played out very well and very dominantly in this election. Now, when we speak about Bihar, you always speak about the Muslim Yadav combine. Now, that has traditionally helped parties win elections. But this time, let's look at the Mahila factor. There were about 124 seats where women voters were in large numbers, and NDA has won 104 seats over there. And why is this important? Because in this election, more than 2.5 crore women came out to vote. They outnumbered the men. And that's why it's a strong victory for the NDA coming from the women voters of the state, which, according to several pollsters, have voted above caste and religious lines as well. What has worked? Possibly there was a scheme that allowed 10,000 rupees of transfer to every woman, free electricity, free jobs, several pro-household schemes that had been launched, and that has helped sway the woman voter. Also, the EBC, when I'm speaking about ME, the Mahila EBC combined, the extremely backward classes were 36% of the state's vote bank, and they seem to have also backed the NDA in big numbers. Let's also see how the NDA has performed in rural Bihar. Rural Bihar is extremely important. 82% of Bihar comprises of rural seats, and in these 223 seats, NDA has won 183. So clearly, when it comes to Bihar, it is the rural Bihar which has helped the JDU and the BJP, Prime Minister Narendra Modi and Nitish, win this election in a big way. The Jan Swaraj Party of Prashant Kishore, a lot of people were talking about that, but clearly they have not been able to excite the voters. People were saying 0 to 5, maybe there'll be a spoiler, but it's just 0. So today, the BJP, the NDA overall are mocking Jan Swaraj Party, but it's a long way for them. They've done some interesting things, some interesting experiments in this election. Let's see how things go. But just to bring up the NDA chart for you, BJP at 94, JDU at 79, both parties performing here. In the opposition alliance, it was only the RJD firing. Congress was down to about 4 to 5 seats. The LGP 23, Hums 5 and RLM 3. So strong performance by all alliance partners, and all of them have gained to deliver this number of 204. Back to you.
Okay, all right, Parikshit, thank you very much. So clearly there is some pole cheer, but then there is some inexplicable X factor that's led to the market doing what it has done. If you think that it's a global move in nature, absolutely not. Asian markets, like we've been telling you, they have been sliding. Asian markets have closed down between 2 and 4%, 4% being the fall on the Kospi, 2% being Hong Kong. Europe is down right now. Even US futures are down. I mean, 0.25% to about 0.5%. So what has happened on our screen is nothing short of breathtaking. Some tactical money. Is it some FPI money that suddenly moved to India? Some tactical allocation. Well, we'll only know once those FII numbers come in later in the evening. But for the time being, let's quickly head across to Mitesh. Mitesh, whoever was thinking of going quietly on a Friday afternoon ending trade, I mean, suddenly this Nifty's move has shaken up everyone.
So, Survi, I think, when the show started and I was hoping that the markets will not close below 25,750, I was literally begging that, it should not happen because then that disturbs the short-term structure. But it's managed to bounce back. That's a good thing. Let's see how much more strength we have. Today is, of course, a day of a lot of events. The global markets are very different. The domestic cues are very different. So it's just a lot of push and pull. But for the time being, the stocks that I have, Wipro is a BTST with a stop at about 242 half for targets of around 248. And also a BTST on Titan, which I would recommend taking a BTST with a stop at 3814 for targets of 3860.
Okay. All right. Got that, Mitesh. Thank you very much for that. And we let you go now. Enjoy your weekend and, of course, the rest of Friday as well. Thanks for being with us. Dharmesh Kant is joining in. As we welcome Dharmesh, let's look at some movers and shakers beyond the index as well. Muthoot, of course, we've discussed, right from the word go, and Grow is the other one that's had such a phenomenal time since listing. Grow is up another 8.5%, and at now about 93,000 crores, it's so much closer to that milestone of 1 lakh crores in market cap. Dharmesh, thanks so much for joining in. It's a day of great gains, actually. So many stocks. Jubilant is surging on my screen. IPCA is up 13%. Piramal Finance 5% higher. And even today's listing, Pine Labs doing very, very well. Let's quickly talk about some of the result hits. Jubilant, Muthoot, would you look at any fresh buys on these stocks?
Yeah, Gautam, Survey. I mean, Muthoot, definitely yes. I mean, the management has doubled their guidance with a strong, reduction in the gross NPAs. And management sounded very confident about the future outlook. We are also on the same platform. We think that NBFCs will be, doing a bricks business going forward into the second half of FY26. And if any rate cuts come forward, I mean, expectation is 25 basis point more rate cut coming maybe in the 5th of December. Then it's going to help further to NBFCs. So definitely a thumbs up on Muthoot. I think 20-25% more, price trajectory upside can happen by the time we end FY26. Jubilant came out with excellent set of numbers, and this is in contrast to what its peer groups have been doing. So a trading play definitely merits our attention in Jubilant Food. I mean, if you are a holder for, say, a couple of months, so maybe 10-15% more upside there. But having said that, let me be very clear on this. This is just a trading play. We are basically not recommending any of the QSRs on a long-term investment play. I mean, 2 years, 3 years down the line, I think all these stocks will be mooted just on the valuation concern.
Dharmesh, hi, good afternoon. The defense pack is all running up once again. So had a long break. Not all of them, but that frenzied move ended about a year ago, and then some consolidation. Are we perhaps in the throes of the start of another move here? And have you looked at stocks in detail? What seems to be a good bet?
Yeah, Dr. Prashant. I mean, defense will always be a play like that. Once, the move starts, you will have a couple of 3-4 months of good trajectory, and the prices will move up 30-40% in that kind of a time frame, and then again it will be a consolidation for a year or so. Typically, all the defense are basically a lumpy kind of an orders and execution takes place, and once an order gets executed, you have a time lag of 6 to 8 months before the fresh set of orders can be executed because of different set of approvals which are needed. I mean, look at the BDL numbers. The numbers were quite good, but they are sitting on order book of in excess of 23,000 odd crores. Same has been the case with, say, HL order book or a BL kind of an order book. So it's a structural growth story in the making. And one has to be invested and stay invested. If you are trying to time it, then, I mean, you may go wrong for some period of time. That time horizon depends upon where you are entering the space. So Practically, I think the entire defense space looks pretty attractive to us, and our topics out there has always been HAL and BEL.
HAL and BEL. I'm looking at some of the other volume plays. NBCC, good price action, good volume action today, 5% higher. Vodafone Idea is one of those up days for Vodafone, almost 5% on Vodafone as well. There is IDBI Bank, which is up about 3%. RVNL, BEL, we were just discussing some of the defense names, SJVN. So largely speaking, it's been a pretty decent session for a lot of these PSU stocks. So that's the look of things on the upside. Dharmesh, any sense on Piramal Finance? The listing now in the new avatar, the entity as we know it. And the thing is, the stock's already moved up so dramatically since that relisting happened. What would your advice be?
I mean, Surya, when the listing happened, it was very cheap when compared to its peer group on the valuation metrics, but post that the stock price movement has been quite sharp. But the entire financial space looks very attractive to us, going by the way the space has panned out, particularly on the NPA side. The concern was on microfinance and low ticket size for the NBFC space. Barring say Bajaj Finance, none of the other companies came out with those kind of concerns. Largely, when 60 to 70% of the companies in the NBFC space have came out with a good set of numbers. So you have to stick to the good quality stock, and I think a huge growth opportunity is ahead in the second half of FY26. So space looks pretty attractive, and a few of the names like Aadhar Housing Finance or in the housing finance side, PNB Housing Finance looks pretty attractive. Piramal, if you are invested, you can continue to be invested, seeing the type of traction this company is gaining of late.
Okay, Dharmesh, we'll let you go on that note. Thank you very much for joining in. And we look forward to connecting again next week with the market action. For now, quick break. Back with more on the other side.
यहाँ से उधर ही जाते हैं ना।
Well, the recovery continues on the street, and it's been a good day and a good week as well, because by the time we close out, the Nifty would be up almost 2% for the week. Mid-cap index up about 1.5%. And imagine this, once again, the close of the week is very near the 26,000 mark. So all in all, the bulls have managed to prevail. However, now we move slightly away from markets. It is Children's Day, so it's time to unravel and reveal the next-gen CNBC-TV18 anchors. And it's over to Anandita Nair for that. Anandita, how is the market?
Well, from my perspective, it really depends on the time of day and where you are. For example, Phoenix is really crowded in the afternoons, but the mornings are quite a bit more relaxed. But my favorite market of all is where my grandparents live, Green Park. But I don't really think that's the kind of markets they want us to talk about, right, Aditya?
Yeah, I think they're more or less talking about stock markets. That's why we have a panel of 6 or 7 unexpected guests right here to talk about the markets. So, let's talk to Neve first. So, Neve, what do you want to be when you grow up?
I want to be a cricketer.
Sorry, what?
I want to be a cricketer.
Who's your favorite cricketer?
Rohit Sharma, because I like his batting stance and his captaincy.
So now you've heard what he wants to be when he grows up.
Okay, all right, and let's get another view. Where's Neil? Neil, who do you want to be when you grow up?
Cricketer.
And which is the cricketer that you idolize?
Shreyas Iyer.
Why? He's an all-rounder.
Because I like his catching.
You like his catching? He's a good fielder.
Yeah.
All right, great.
Nigel, you asked him which is the cricketer that he likes the most. He said Shreyas Iyer. If you asked him which is the anchor that he likes the most, he would say Tendulkar. Then we have so many others as well. Ekta, Isha, what happened to you? Are you not liking the markets today? Yeah, we have a little one shouting Papa as well. But Nigel, what a joy. And, the next panel of CNBC TV18, what do you have to say to them?
Well, my multi-baggers are obviously in my arms right now. And Nitara, would you like to say hi to everyone? Hi.
Let's put the toughies to Prashant.
No, there's no toughies. Adrit, right?
Yes.
Adrit, of course, is our colleague Suma's son, who's the head of marketing of CNBC. Adrit, what do you want to be when you grow up?
A musician.
Wow. A musician?
Yeah.
What kind of musician?
Drummer.
Drummer?
Yeah.
You play the drums?
Yes.
What's your favorite? Few lines for us?
Yeah, let's get Summer of 69.
Summer of 69?
Wow.
You want to sing it? No?
I think all the kids...
I could be a kid say no to something I don't want to do.
Well, she's going to talk? You're going to put the mic?
Papa? She'll eat it up for sure.
I think all the kids will like to sing one line on Heal the World, Mangla.
Yes, all right. If the kids don't sing, I'll join in.
Okay, 1, 2, 3, go.
Heal the world, make it a better place for you and for me and the entire human race. There are people dying. If you care enough for the living, make a better place for you and for me.
All right, so that's the Children's Day special out here, but I'll tell you what.
I think we have time, Nigel. We can go on.
I think Prashant wants to sing another verse.
I want to sing. But Rima's kids, guys, come up. Come up ahead. No? I think we're right.
I'm sure this... All right, I'll tell you what. Let's move towards the bell and let's do the countdown because 10,
kids,
9,
kids, all there.
8, 7, 6, 5, come Dolly. 4, 3, 2, 1, go.
I guess we got to wrap the show. What a week.
Well, that's right. It was a good week for the markets, a good end, and we are definitely having a great party out here with all the kids ringing the closing bell on Children's Day. Doesn't get more special than that. Let's do one more, guys. Nice ring of the bell.
Ring it hard.
Ring it.
And by the way,
we have editors roundtable next, which happens right here. So we'll have to figure out how we'll do it. I think we'll have the kids on, right? On editors roundtable next.
Yeah, and I think after Prashant's kids, took that away, I think jobs are in doubt. It's not AI. It's the next gen that's challenging us. All right, we'll wrap. Yeah. We come back, and I think we'll have editors roundtable that's waiting for us on the other side.